Now, back by popular demand, it's the Lance Roberts Show.
It's 6:06 this morning. It's hump day. That's right. So far, so good. Week's almost over. Pretty day yesterday. I've decided when I die, I want to come back and be my dog.
You want to be your dog?
I just want to come back and, I want to be a dog that's in a really good home that just gets to lay around and do nothing all day.
Well, like my dog.
Yeah, pretty much.
You can come back and be my dog.
I figured that your reward in life is that if you've been a good person, that when you come back, you get to come back as a dog in a really well-kept home.
Have you seen that movie, The Life of Dogs?
Yeah.
Enough said.
All those movies are tearjerkers. No, I got home yesterday and it's like 78 degrees, really beautiful day outside. So
Top down day, baby.
it was. So I talked to my wife. I said, "Hey, let's go to the park. Let's go for a run." And so we got the dog. He's all excited. He'll go anywhere. Anytime you just say, "Want to go?" He'll go grab his leash and he's ready to go. So we go to the park and we're running and he's really well behaved. So and he's been trained well. So when we're running, as long as there's nobody else around, I always carry the leash with me just in case other people show up. Never know. People are so freaked out these days. And he's all of about 20 pounds. So
He's menacing.
Exactly. So but most of the time I just drop the leash on the ground and he just runs right with us.
Yeah.
But so we're running and he's running beside us and he looks over and he eyeballs this ditch and it's full of water and there he goes. Because it's hot outside, right? I mean it's like 70, 77, 78 degrees yesterday. So he's running in a full coat, and so he just goes, runs, rolls around the water, gets out, comes back, runs with us the rest of the way. Every time he sees a full of water, he's in it. And so I was sitting there thinking, I was like, man, it must be good to be a dog. Just dump it in any water you want and it's all good. Nobody cares.
There you go. Yeah.
So anyway, he was all happy. Stunk though when he got home. Bad. so then his day didn't end well because he got a bath. Exactly. So anyway, that's it. Lots of stuff going on today we've got to get into. It is Wednesday, of course. Markets yesterday gave us a little bit of a bounce, and yesterday morning, we'd had this sell off on Friday, which was, more importantly, it was a reversal from Thursday's big rally following the Fed's announcement. So going back in time now, the way back machine, we go all the way back to Wednesday. The Fed says, we're not going to raise rates anymore, and we're going to stop reducing our balance sheet by September. Markets really took a little bit of a break on Wednesday. Thursday came out of the gate, rallied sharply. On expectations that, hey, Fed rate cut means, or this position by the Fed is good. That's more accommodation for the markets. And then Friday they woke up and go, wait a minute, the Fed just downgraded economic growth in the U.S. A lot. And considering they're always overly optimistic, their expectation is probably higher than what's going to turn out to be the case. Market sold off pretty sharply on Friday. Got a little bit of a bounce out of the gate yesterday, and it faded all day. And in fact, we lost about half the gain by the end of the day. It wasn't really a good, convincing day. This morning, futures are pointing down here a little bit. So the issue is, and we've written some articles about this, and I've got one coming out next week as well, is that there's a lot of things that are going on that the markets are simply just either ignoring, and particularly the media, the financial media in particular, is just disregarding. Oh, this time is different. Inverted yield curves don't matter. Blah, blah, blah. These are messages. And and a lot of people say, well, just don't pay attention to the messages. Well, that's kind of like, driving into a busy intersection and ignoring the red light. There's a reason that light goes from green to yellow to red. And right now there's a lot of indications that suggest that we are seeing a yellow light, at least, not a red light. It's not time to sell and run away and panic. But there are certainly some signs of caution that the financial media is telling people to just basically disregard. It's no big deal. Don't worry about it. It's nothing to worry about. Inverted yield curves, which is kind of the big news as of late, is not something that you worry about today, this moment. It takes time for these things to filter through the economy. But what happens when the shorter end of yields rise higher than the longer end of the yields is that that's a sign that the economy is slowing more rapidly than expected. And this has always been the case going back in history. One of the best predictors of future recessions has been the rate of interest, right, and what's being charged on interest rates. And this has an impact all throughout the economy. The Fed was hiking rates over the last year or so, a couple of years, and initially, when the Fed started hiking rates, everybody said, don't worry about it. It's all fine this time. And I was writing articles saying, pay attention to this because it's a very different environment that we live in today. People are heavily leveraged, right? They've taken out mortgages on houses that they can't afford. That's why they can only afford to put 3% down. The first rule of thumb is if you can't put 20% down on a house, you probably can't afford the house. And we've ignored that. We've come up with all these machinations about, how to get you in a home with no money down or very little money down. And we went through the financial crisis. Coming out of the financial crisis, we still haven't learned those lessons. We're still doing the same things about trying to get people into houses they can't afford. And look, it's an industry, right? The real estate industry, they've got a huge lobby and they want to build houses and they want to sell houses. So they're going to do whatever they can to get you into the house. Realtors are just as bad. I have friends that are realtors, no offense intended, but y'all are out there to sell houses. So you'll sell people houses that they really can't afford if you can get them into them. And it's okay. That's the business. And everybody knows that is the business. But there is implications for that. And as we were writing about over the last couple of years, when the Fed started hiking interest, we said, hey, pay attention to this because when the Fed started hiking rates, this is going to limit people's ability to buy houses and to afford the houses they're in. And right now, as we are looking at it today, housing prices are dropping. Housing sales, permits, et cetera, are slowing rather dramatically. And evictions are rising sharply. In other words, people that aren't paying their bills are being evicted from their houses because they can't afford the payments. So these issues of yield curves and things that are happening in the markets, yes, the markets are ignoring them at the moment. It's been a great rally, and we've participated in that. But importantly, just pay attention to these warning signs. They're basically flashing yellow at a very busy intersection that's coming up. We got a lot of stuff to get into this morning. Stick around. More of the Lance Roberts Show. Don't go away.
Are you hanging on the edge of your seat? I don't go away. The bullets red. Listen to the sound of the beat.
Get daily investment news you can use, delivered at the speed of the internet. Sign up for Lance's newsletter now at lancerobertshow.com.